There's a family you've probably never heard of that has survived every major system change in the last 200 years. Not just survived, profited. When monarchies fell, they thrived. When empires collapsed, they consolidated. When currencies reset, they got richer. When revolutions burned through Europe, they financed both sides. When world wars destroyed nations, they rebuilt them. And when the gold standard died in 1971, they were positioned perfectly to profit from what came next. This isn't about conspiracy, this is about pattern recognition. Because while most families lose their wealth in 3 generations, one family has maintained power across 8 generations by following a simple principle. Don't bet on systems. Bet on change itself. The family is the Wallenbergs of Sweden. And their story reveals something most people never learn. The greatest fortunes aren't built by predicting which system will win. They're built by positioning to profit no matter which system emerges. Let me show you exactly how they did it, the specific moments where they positioned for regime change, why Sweden's neutrality was the perfect laboratory for this strategy, and why understanding their playbook matters right now because we're living through another system change. The monetary system that's existed since 1971 is breaking, and families like the Wallenbergs are already positioned for what comes next. Before we go through how they profit from system change, you need to understand what system change actually means. Not incremental reform. Complete restructuring of how power and wealth flow through society. In the last 200 years, there have been 6 major system changes. The fall of monarchies and rise of nation-states, 1815 to 1918. The collapse of the gold standard, 1914 to 1944. The restructuring of global power after World War II. The fall of the Soviet system, 1989 to 1991. The creation of the euro and European integration, 1999 to present. And the current transition from dollar dominance to a multipolar monetary system, 2008 to present. Each transition destroyed some families and enriched others. Old money that was tied to the old system lost everything. New money that emerged from the chaos won briefly but rarely lasted. But a handful of families positioned to profit from change itself maintained wealth across all 6 transitions. The Wallenbergs are the clearest example, and their strategy has been consistent for 150 years. Control strategic infrastructure, finance all sides of conflicts, maintain political neutrality while holding economic influence, position in hard assets before currency resets, and most importantly, never fully commit to any single system. Let's start with how they built their foundation, because understanding the origin reveals why they could survive what destroyed everyone else. Marcus Wallenberg Sr. was born in 1864 in Stockholm. His family had been bankers for 3 generations, but they were small players, regional, limited. Then Marcus made a decision that would define the family strategy for the next century and a half. He looked at Sweden's position in 1890 and saw opportunity through neutrality. Sweden was surrounded by empires, Russia to the east, Germany to the south. Britain controlled the seas. France was rebuilding after defeat. Norway was breaking away from Swedish control. The entire region was a powder keg. And Marcus realized that being small and neutral was an advantage, not a weakness. While other countries chose sides, Sweden could trade with everyone. While empires fought wars, Sweden could finance infrastructure. While currencies collapsed under war debt, Sweden could maintain a stable krona. The strategy wasn't to be the most powerful. The strategy was to be necessary to all powers. In 1894, Marcus and his brother Knut founded Stockholm's Enskilda Bank. The bank wasn't just for lending. It was structured as an investment bank that could take equity stakes in industrial companies. This was revolutionary. Most banks lent money and collected interest. The Wallenbergs would own the companies directly. By 1900, Stockholm's Enskilda Bank controlled stakes in Asia, which would become ABB, Sweden's major electrical company. Separator, which would become Alfa Laval, the food processing and maritime equipment giant. And Atlas Copco, the industrial tools and mining equipment manufacturer. 3 companies that produced essential industrial goods, not luxury items, not consumer products, essential infrastructure. This was deliberate. Luxury companies die in wars. Consumer companies fail in depressions. But infrastructure companies that produce mining equipment, electrical systems, and industrial tools are needed by whoever emerges victorious. If Russia won, they'd need Swedish mining equipment. If Germany won, they'd need Swedish electrical systems. The Wallenbergs were building a portfolio that couldn't lose. Then came the first test. World War I broke out in 1914. And this is where the Wallenberg strategy proved its genius. While Europe tore itself apart from 1914 to 1918, Sweden remained neutral. But the Wallenbergs weren't passive observers. They were actively trading with all sides. Swedish iron ore went to Germany. Swedish timber went to Britain. Swedish ball bearings, essential for manufacturing everything from tanks to aircraft, went to everyone. SKF, the ball bearing company controlled by the Wallenbergs, supplied both the Allies and the Central Powers. This wasn't treason. This was neutrality executed for profit, and it worked because Sweden's neutrality was genuine. The government didn't take sides, which meant the Wallenbergs could finance and supply all sides without political consequence. But here's where it gets interesting. While other European banks were hemorrhaging gold to finance the war, the Wallenbergs were accumulating it. Because they weren't lending to governments at fixed interest rates. They were taking equity in companies that supplied the war. SKF's profits tripled during the war. ASEA doubled. Separator expanded across Europe. The Wallenbergs converted war demand into permanent ownership of essential industries. And when the war ended in 1918, their competitors were destroyed. German banks lost everything when Germany collapsed. Russian banks were expropriated by the Bolsheviks. British and French banks were buried under government debt, but the Wallenbergs emerged stronger because they'd financed production, not governments. Between 1918 and 1939, the Wallenbergs consolidated further. They bought companies across Scandinavia while everyone else was selling in panic. When the Great Depression hit in 1929, industrial assets crashed. The Wallenbergs bought mines, factories, and shipping companies at fire sale prices. By 1939, they controlled roughly 1/3 of the Stockholm Stock Exchange's total market value. Then came the second test, World War II. And this is where the Wallenberg strategy became more sophisticated, because Sweden's neutrality in World War II was more complicated than in World War I. Nazi Germany occupied Denmark and Norway. Sweden was surrounded. The pressure to cooperate with Germany was enormous. Many Swedish companies collaborated actively, supplying the Reich with iron ore and industrial equipment. The Wallenbergs navigated this with extreme precision. They supplied Germany when forced, but they also helped Allied intelligence. And critically, they positioned for both outcomes. Jacob Wallenberg, who ran the family bank during the war, maintained relationships with both sides. He met with German industrialists and Nazi officials. But he also worked with the American OSS, the predecessor to the CIA. And in 1944, when it was clear Germany would lose, Jacob helped Raoul Wallenberg, a distant cousin, go to Hungary to save Jews from deportation. Raoul saved tens of thousands before disappearing into Soviet custody in 1945. The family's wartime record is debated by historians. Some say they collaborated too closely with the Nazis. Others say they did what was necessary to protect Swedish neutrality while secretly aiding the Allies. What's undeniable is that they emerged from World War II in a stronger position than anyone else. By 1945, Sweden was the only industrialized country in Europe that hadn't been bombed. Swedish factories were intact. Swedish infrastructure worked, and the Wallenbergs controlled the industrial companies that would rebuild Europe. While Germany, France, Britain, and Russia were in ruins, Sweden was ready to supply everything needed for reconstruction. Asia supplied electrical equipment across Europe. SKF supplied ball bearings. Ericsson, which the Wallenbergs had invested in, supplied telecommunications. Saab, which they also controlled, transitioned from military aircraft to commercial production. And Stockholm's Enskilda Bank financed projects across the continent. Here's the key insight. The Wallenbergs didn't just survive 2 world wars. They positioned their companies to be essential regardless of who won. And because Sweden remained neutral, they could trade with everyone after the wars ended. While other countries rebuilt slowly, constrained by debt and destroyed infrastructure, the Wallenbergs captured the reconstruction market immediately. Between 1945 and 1971, the Wallenbergs expanded globally. They took Swedish companies public. They merged operations with American firms. They entered joint ventures across Europe. And when the Bretton Woods system collapsed in 1971, they were positioned perfectly. The collapse of the gold standard in 1971 was the third major system change in the Wallenberg era, and once again, they profited. Because while most investors held currency and bonds that lost value through inflation, the Wallenbergs held equity in industrial companies. Real assets that appreciated with inflation. When Nixon closed the gold window on August 15, 1971, the dollar lost its anchor to gold. Every currency in the world became pure fiat. Inflation accelerated, but companies that produced real goods, mining equipment, industrial machinery, telecommunications infrastructure, they could raise prices. Their revenues inflated, and their stock prices exploded. Between 1971 and 1980, the Stockholm Stock Exchange rose dramatically as inflation drove nominal asset prices higher. The Wallenbergs, holding enormous stakes in Asia, Ericsson, SKF, Alfa Laval, and others, saw their wealth compound. Not because their companies were growing faster, because the currency was being debased, and they held assets, not paper. This is when the strategy became clear to anyone paying attention. The Wallenbergs weren't betting on economic growth. They were betting on currency instability, and they positioned in real productive assets that would hold value regardless of what happened to the monetary system. By 1980, the Wallenberg sphere controlled companies representing roughly 20% of Sweden's GDP. One family, 20% of the economy. That's the kind of concentration that only happens when you survive system changes that destroy everyone else. But the strategy required constant adaptation. When the Soviet Union collapsed in 1991, the Wallenbergs positioned in Eastern Europe immediately. When the euro was created in 1999, they restructured holdings to benefit from European integration. And when the 2008 financial crisis hit, they were ready. The 2008 crisis should have devastated the Wallenbergs. They held massive stakes in industrial companies that depended on global trade. When trade collapsed in 2008 and 2009, revenues fell. Stock prices crashed, but the Wallenbergs didn't panic. They bought more. Between 2008 and 2012, they increased their stakes in core holdings while competitors sold in panic. They bought ABB shares when the price collapsed. They bought Ericsson shares during the telecom downturn. And when the European Central Bank and Federal Reserve started printing trillions, the Wallenbergs were positioned in real assets that would appreciate with monetary expansion. By 2015, their companies had recovered fully, and the Wallenberg fortune, which had been estimated at $60 billion in 2007, exceeded $100 billion by 2020. Not because they built new businesses, because they bought during crisis and held through recovery. Now let's look at the current structure. Because understanding how the Wallenbergs are positioned today reveals how they're preparing for the next system change. And the next system change is already beginning. As of late 2025, the Wallenberg family controls companies through Investor AB, a publicly traded investment company they founded in 1916. Investor AB holds stakes in over 30 companies with combined revenues exceeding $150 billion. The largest holdings are Atlas Copco, Ericsson, ABB, AstraZeneca, and SEB Bank. These aren't random companies. Each represents a strategic position in essential infrastructure. Atlas Copco makes mining and construction equipment, needed in any economy. Ericsson provides telecommunications infrastructure, needed for modern connectivity. ABB produces electrical equipment and automation systems, needed for industrial production. AstraZeneca develops pharmaceuticals, needed for healthcare. SEB is a bank, needed for finance. Notice the pattern. Nothing optional, nothing luxury, everything essential. This portfolio survives regime change because it produces what any system needs. Communist, capitalist, democratic, authoritarian, doesn't matter. Everyone needs mining equipment. Everyone needs telecommunications. Everyone needs electrical systems. But the positioning goes deeper. The Wallenbergs hold significant gold reserves through their bank holdings. They hold real estate across Europe. They hold timber rights in Sweden. They hold equity in renewable energy companies. And they maintain liquidity in multiple currencies, not just Swedish krona. This is diversification designed for system instability. And here's what reveals their current thinking. In the last 5 years, from 2020 to 2025, the Wallenbergs have increased their holdings in 3 specific sectors. Rare earth mining companies, pharmaceutical companies, and renewable energy infrastructure. Why these three? Because they're positioning for the next system transition. Rare earth elements are essential for technology. Every phone, every computer, every electric vehicle, every wind turbine requires rare earths, and China controls 90% of processing. The Wallenbergs are investing in non-Chinese rare earth production, betting that Western countries will need alternative supply chains. Pharmaceuticals became obviously strategic during COVID. The Wallenbergs already controlled AstraZeneca, but they've increased their stake and invested in biotech firms developing next-generation therapies. Health infrastructure is essential regardless of economic system, and renewable energy infrastructure. The Wallenbergs are positioning for the energy transition. Whether you believe in climate change or not, governments are mandating renewable energy. The Wallenbergs are investing in the infrastructure that produces it. Wind turbines, solar manufacturing, grid storage. These will be necessary regardless of ideology. This is the strategy playing out in real time. Position in what any future system requires. Don't bet on which political party wins. Don't bet on which ideology prevails. Bet on what every system needs, and make sure you control companies that produce it. Now, let's compare the Wallenberg strategy to families that failed, because the contrast reveals why most wealth doesn't survive regime change. The Romanovs in Russia had more wealth than the Wallenbergs in 1900. By 1918, they were dead, and their wealth was confiscated. Why? Because their wealth was tied to the monarchical system. When the system fell, they fell with it. The German industrial dynasties, Krupp, Thyssen, they were wealthier than the Wallenbergs in 1930. By 1945, their assets were seized and their companies were dismantled. Why? Because they backed the Nazi regime completely. When that system collapsed, they lost everything. The British aristocracy held more land and wealth than the Wallenbergs in 1900. By 1980, most estates had been sold to pay taxes. Why? Because their wealth was tied to an empire that dissolved. When the empire ended, the wealth evaporated. Even the Rothschilds, who pioneered the strategy of financing all sides, lost significant wealth during World War II. Their French and Austrian holdings were confiscated, their influence diminished. Why? Because they were too visible, too associated with one system. The Wallenbergs stayed smaller, stayed neutral, stayed invisible. The pattern is clear. Families that bet on one system lose when that system changes. Families that stay neutral and control essential infrastructure survive. The Wallenbergs understood this in 1890. They've executed it for 135 years. And they're still executing it today. So here's what this teaches you. Not about copying the Wallenbergs. You're not running a family bank controlling 20% of an economy, but about understanding how wealth survives system change. Because you're living through one right now. The dollar-based monetary system that began in 1971 is ending. The signs are everywhere. BRICS nations building alternative payment systems. Gold purchases by central banks at 50-year highs. The dollar's share of global reserves falling from 73% in 2000 to 58% in 2025. Treasury yields spiking despite Federal Reserve intervention. These are symptoms of system transition. Most people are positioned for the current system to continue. They hold dollars, they hold bonds, they hold savings in accounts denominated in currency that's losing value. This is how the middle class gets wiped out during system change. They're holding claims on a system that's breaking. The Wallenbergs aren't holding currency. They're holding companies that produce essential goods. They're holding real assets. They're holding positions that survive regardless of which monetary system emerges next. Whether the dollar remains dominant, whether a gold-backed currency returns, whether BRICS creates an alternative, whether we get central bank digital currencies. The Wallenbergs own infrastructure that any system needs. You can't replicate their scale, but you can replicate the principle. Don't hold paper claims on a system that's transitioning. Hold real assets that produce value regardless of the system, real estate in strategic locations, commodities that any economy needs, equity in companies that produce essentials, not luxuries, skills that translate across systems, and relationships that survive political change. The Wallenbergs survived 6 major system changes by never fully committing to any system. They financed all sides, they stayed neutral, they controlled essentials. And they positioned for change itself, not for any particular outcome. That's the strategy, that's the pattern, and that's what's required to survive what's coming. If this showed you how one family profited from every system change by never betting on systems, just on change itself, and if you understand that we're living through another transition right now, you need to watch what happens to your savings during a currency reset. Because understanding how wealth survives regime change is the first step. Understanding what happens to your specific holdings during monetary transition is the second. And that video will show you exactly what to expect and why most people will lose everything they've saved while a small minority consolidates their wealth. The pattern doesn't change. The only question is which side you'll be on when the reset happens.